what is expected the next week, the weekly closure of the assets and what that suggests, and so on and so forth. So as usual, we're gonna go scan the markets. We're gonna go through the major indices and any actual cross that you might any actual cross or asset metal index that you want me to cover. So I will be here to analyze anything that you need. But before we start the usual scanning of the markets, let's briefly discuss what we have seen so far. So we had a bit of a mixed markets. What I mean, we had initially a weaker dollar, but then a shift since yesterday after the strong the strong retail sales and Philly Fed index. We have seen after that, following that, a stronger dollar. So for the time being, we have seen the bond yields drifting higher, led by a sell-off this morning in Asia session. So we have seen initially treasuries cheapened after the US data yesterday, and then a bit of a more a bit of a settlement as we moved into the Asia session and to the European session. So the key movers, other than the data, of course, is what this data, how this data could impact, how this data could impact the central bank's decision next week. So focus is on next week's meeting. So it will be a massive week ahead because we have FOMC meeting, rate decision, and press conference. We have Bank of England and the Parliament voting with the rate decision, with the press conference as well. We have Bank of Japan as well, press conference and rate decision, even though it's expected to remain unchanged. And we have also S&P. Also, rate decision and press conference from S&P as well. So 4 major banks will be in the spotlight next week, but more precisely will be FOMC, the Fed, and the Bank of England, because all the data that we have seen so far in September have added to both banks, have added actually to the arguments of a hawkish shift to both Bank of England and US and Fed. So we have seen, like from the Fed, we have seen strong retail sales, Philly Fed also higher than expected, inflation, a weaker inflation. On the other hand, we have seen from the UK side a very solid retail sales as well. So the so far releases have actually are actually providing some kind of a support on a more hawkish stance, even though it's not expected, at least for this meeting, for next week meeting, to change their policy. But still, the focus is on these 2 banks because of the press conference. So any hint, any comment from the government, from the head of Fed and the head of Bank of England in regards to a shift sooner than what is expected, the quantitative easing happening sooner than what is expected, it could add further pressure, further volatility in the asset in the market, and further pricing of a potential move of the policy. So this was briefly what is expected next week. We're gonna release after the live the weekly agenda, the events to look out for next week. So over there, we are explaining what is expected for each one of these central banks, what's the outlook, where what might trigger a hawkish shift, and so on and so forth, along with all the major data releases, the economic data releases next week. So this, of course, this attention to the central banks is coming also on the back of continuous worries around coronavirus, around the Chinese clamped down as well. The slowdown of there's worries around the slowdown of the Chinese economy, and so on and so forth. Actually, the global economy, but China has provided some significant signals of a slowdown, especially the last 2 weeks. So, other than that, guys, yeah, keep an eye on the speculations around the central banks. Also, let's not forget that uh, the 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 concerns um, around the central banks are actually adding pressure in general on on the market sentiment, because there are speculation, sorry, as I said, in regards to a hawkish stance. So what I mean by hawkish stance, a potential hike rate earlier than what was expected, and I'm not referring solely to the Fed and Bank of England, but also on the ECB. So especially after some comments from officials and some reports that they have been published in from big publishing houses like Financial Times, for example. There was the latest report that we had from the Financial Times was suggesting that the chief economist laying from ECB um, actually stated that an internal model showed inflation could hit 2% by 2025. So we might see further pricing of something like that in the markets, even though it's far away for 2025. But nonetheless, this is what is all about. It's all about sentiment after all, right? And it wasn't solely Lane. It was also other speakers that are stressing a bit the outlook for the ECB. For example, I have in front of me ECB's Kazakh's latest comments. I think they were just today, that he stated that the central bank's inflation outlook is likely to be reversed higher, so support the rising of inflation. A lot of ECB members actually. So let's scan the markets. I can see your comments. I can see your questions. Welcome, everyone. And as usual, you want me to start with gold. Okay. So what's coins in the range in dollar pairs? What pair getting a big impact on the geopolitical? Okay. So actually, let's start with dollars, since someone that up, Adana, picked the dollar up. So let's start with dollar, guys. So let me just, okay, and I forgot to open Facebook to see the questions on the Facebook page. Hopefully I will manage to open a new tab with the Facebook channel on. So okay, let's start with the dollar. As I told you already, it has been like they have been. We have noticed a lot of swings this week, from dollar up, down, and so on and so forth. But there was a decisive move yesterday after the data that provided for the first time the past 2 weeks a decisive, strong, bullish candle for dollar index. As you can see over here, this is the daily chart. The dollar managed to cross above the 20-day moving average. However, it's still struggling. Looks like it's still struggling to break this key resistance level at 92, 93 territory, more precisely. So we have seen double up fractals over here, along with the 68 1.8% Fibonacci level. So 93 is considered to be a very, very strong resistance level for the dollar index. So a failure or a pullback away once again from that area could turn dollar back lower, and that actually the consolidation is pretty much expected from the dollar if we consider that markets are waiting for the Fed. And I think I'm not sharing my, yes, I'm not sharing my screen. Sorry, guys. So again, okay. So as I just stated, we had a lot of consolidation since actually since the last 8 days in a row. But yesterday we have seen it's quite solid, strong bullish candle crossing above the 20-day moving average, and close above the 20-day moving average and the 50% retracement level from the down leg seen on the peak of the second quarter of the year. So, however, as I mentioned earlier, 93 area, which coincides with the latest double up fractal over here, and coincides with the 61.8 Fibonacci level, it considered to be a really, really strong resistance level for the dollar in the medium term. You can see that it has been retested several times. So even in June, sometimes has been broken already, but quickly turned lower. Again over here in the beginning of August. So 93 is a key resistance area for the asset. So a pullback from that territory could imply to either the consolidation, the continuation of this consolidation that we have seen the last 8 days, or even a return back to the lows of 92. And as I stated, consolidation is really something that we are expecting ahead of the Fed. So Fed is on Wednesday, if I'm not mistaken. But let me double check. Yeah, Fed is on Wednesday. So ahead of the Fed, the trading in general in the market is expected to remain cautious, or even a bit choppy sideways, especially for the dollar and the dollar crosses, or dollar related assets in general. So take care, have this in mind. And something that I didn't mention is that on Monday, Chinese and Japanese markets will be closed. So you can understand that the volume might be a bit lower than what is usually the case. So yeah, let's see the intraday the intraday chart. So after posting a high at 92.92 yesterday, we have seen a bit of a slowdown on the dollar, holding, however, a nice support at the 92.70 territory. So as you can see, it sustained its gains, but it has settled a bit lower than yesterday's gain. So it has been consolidating, and I already explained that that peak was due to the solid retail sales. So the sentiment, so intraday sentiment has slowed down as well. As you can see, we have MACD slowing, detecting lower and lower, something that implies to a decrease of the positive bias in the short term. The same stands for RSI, even though it have managed to be sustained above 50, something that so this compo, this steady slowdown in RSI, but steady above 50, and the slowdown of MACD without turning negative implies that we had a slowdown, but the asset might stop declining and might settle in close to the 72 it's to the 92.70 floor. So we've seen for 6 consecutive hours like sustaining a move within the 92.70 territory. So overall, however, guys, because the question actually wasn't precisely for dollar index, but it was for the dollar pairs. So I will quickly shift to euro dollar. And I would like to state at that level that you need to think about, if you're analyzing a dollar cross, you need to consider the both the central banks that are behind these regions, these crosses. So euro dollar, for example, what ECB is about to do, what Fed is about to do, and this will actually, and how the US economy is doing, and how they, in comparison with the Europe economy. So each asset is a comparison of the two economies that of the two economies of the two economies, so Europe and US. In general, we can see over here euro dollar, okay, dipping lower for 10 days in a row, especially a decisive bearish candle yesterday, but dip lower, crossing the 20-day moving average yesterday and closing below that. And so far today, it hasn't managed to get back higher. So it has to do also with the speculations on ECB policy, but also on the speculations of Fed. While let's not forget that there is a favorable US growth rate in comparison with the Eurozone one. So the policy, the fiscal stimulus policy in the US is more expansionary compared to Eurozone. So that's why in the long term, or from fundamental perspective, you prefer euro dollar overall in the long term. Again, by stating long term, I am referring to weekly or even monthly charts. Overall, euro dollar is expected to continue lower. There is a downside pressure on euro dollar if we consider that the US growth is higher than the European one. So, and the fiscal stimulus, as I said, is more expansionary than the European one. So that's why we have seen, you see that. So this is the daily chart. It's a bit messy, I know. Let me put the weekly on. You can see that the euro dollar has been held close to 1.5, actually. So that should be 16 months territory. So it's at the same territory that it was back in May 2020. So despite some appreciation that we have seen in the end of 2020 and in the end of the first quarter of 2021, the asset holds at 16 months low territory. And this is what I just explained. So this is in the long term. Now, I'm not sure whether you're interested in the long term, but let's check the daily picture. This is the daily picture. You can see that it was actually consolidating between the 116.73 low and the 119 level since the beginning of July. But currently, the asset has managed to turn to move below the mid level of this territory, something that adds that actually turned the attention to the low territory once again, and the 117 or even below the 117 territory. So further actually strengthening of the bearish bias could open the doors, first of all, to 117 and then to this floor over here at 116.62. Okay, especially if we see the asset failing to close the day and the week above the 118 territory. So If something like that happens, then this implies to an increasing bearish pressure. However, the momentum indicators remain mainly on a neutral, in the neutral zone. Um, so let's wait and see. In the 1 hour chart now, try to recover some of the losses of yesterday's losses, but on the US Open, we have seen a shift lower for the euro dollar, okay, rejecting the day's high and extending lower. So even the fast moving averages have stopped rising. Instead, they are started turning lower again. So of course, we need to wait for further confirmation, but let's just put some Fibonacci's on. So actually, not Fibonacci's. If I zoom in, I would like you to see that this is the latest low that we have from euro dollars at 117.75. So a breakout of that level within the hour, the top of the hour, could signal the potential turn lower for euro dollar. So let me just okay. So MACD is at zero, but signal line remains below. And it remains in the negative territory, so there is still bearish. There are still bears. There are still bears in the market, pressuring, adding pressure to the price. RSI already started slowing down and pointing lower. The stochastic is ready to cross a bearish cross, but we need to wait for this to finish. We need to wait for a confirmation. Don't wait for the candles to close before you take any decision. So so this clash of the stochastic line hasn't finished yet, so we're not sure whether this is a bearish cross or not. So wait and see. uh, So let's get back to gold, and I'll take your comments one by one. Try to reply one by one. So let me just also check on Facebook questions. So next, gold support and resistance daily and weekly. Okay, my dear Vicky. So let's go back to gold. Okay, here we are. So gold had actually had a decisive, actually a big decline yesterday. It was around 2.7%, if I remember correctly. Yeah, we have seen like closing and moving lower below the 20 and 50-day moving average for 3 consecutive days. So why is that? This actually this is due to the yields. So higher yields is what has caused this pressure on gold. So the higher the yields, the stronger the dollar, the lower the gold will be. So that's why we've seen gold dipping to 1745, and actually expanding the lower Bollinger Bands area, lower MACD. Let me check that you can see the whole screen. Yes, now you can. So can you see that? This candle not solely broken the month support, but also triggers the support that has been seen since June. Why? We have seen the daily Bollingers expanding lower, something that implies to a negative outlook. Nonetheless, the asset is trading below all the daily moving average, 50, 220, while interesting is the fact that MACD has turned negative. However, we need to confirm this shift lower with the signal line. Signal line holds still at the neutral zone, so it's something that we should check Monday morning, okay, whether indeed there will be a resumption of this decline, and we could see the doors opening for the for 2021's low back down to 1700s, or even 1676 territory, because an extension of the gold lower could open the doors, guys, to, as I said, to the lows of 2021 of the whole year. So we need to keep an eye on this week's closure, but also on Monday morning opening. So intraday now. So over here, just to summarize a bit, okay. Okay, here it is. So immediate support remains, yesterday lows are at 1745, okay? And the very next one will be on the 1728. On the flip side, key resistance will be the previous support level that has now shifted into an immediate resistance area, so the 1780. And if I'm not mistaken, this is slightly above the yesterday's mid area. So the middle of this bearish candle is at 1771. So you can understand that a move above 1770, more precisely above 1780, could imply to a potential appreciation and a turn back to the 1836 territory. If we don't see something like that, then the asset remains under pressure with 1745 and 1728, the immediate support levels. Now, in the hourly, you said daily and weekly, sorry, Vicky. So weekly, okay, nothing really changed. 1745 and 1728 remains the support area. Of course, in the next few days or weeks, if you prefer, if we see a retest or even a breakout of 1680, then this could turn the overall outlook, the long-term outlook of gold, further to the downside and to the 200 day moving average, because a break of 1680 implies to a break of uh, more than a year support. Actually, to be precise, implies to a breakout of 15 months support area. So this is a support area that has been held for 15 months in a row. So a break of that territory could open the doors, could shift actually the overall outlook into a negative one, with 1600s in the spotlight and even 1450 territory. So we are referring to a big sell-off. So that's in the long term. Now, intraday failed to recover significant losses, turned back down. So we have a bit of a intraday. We have seen over here an evening star formation. You see that bullish, nearly full body one, a doji in the middle, and a decisive nearly full body one, a bearish one, reversing the first and the second candles gains. So also, so evening star is a bearish pattern. We have also the cross of the fast moving average in the 1 hour chart, also adding to the bearish bias in the 1 hour. MACD remains negative. RSI pointing lower below 15. It keeps pointing lower, ready to retest the 30 barrier. So prior to the US Open, so like 1 to 3 hours ago, we have seen the start of a decline for gold intraday at least. So next support in the 1 hour chart, it could see at the bottom of these Bollingers and the 1748 level. However, what is actually triggered my attention is the fact that Bollingers have flattened. So this decline might be proven a bit limited. Okay. So that was on gold. Watching from Malaysia, good. Okay, what really caused the price of the gold to fall this way? You're referring to yesterday. What is what we explained? You need to have in mind that a hawkish stance, okay, a hawkish comment, a hawkish central bank implies to appreciation of its currency. So in this case, it was dollar, but also a fold of the treasury yields and bonds higher. So this has a consequence to hurt the interest for gold. So that's why we've seen this the gold turning lower. Yes, yes, Adam. Actually, central banks. It's been central banks the last 2 weeks for sure. So fundamentals. So it was the release of economic data that they actually they actually helped the markets with the speculations ahead of the of central banks actions next week. What's the fate of gold? Okay, we already replied to that. For the time being, it's neutral to negative, but we need to see for turning to a negative outlook in the medium term. We need to see. We need to wait for today's candle to close because we will actually figure out how this weekly candle will what this weekly candle will present. But definitely a negative weekly candle, a strong one, with a big body, could strengthen the turn of the negative outlook for gold, as I already mentioned. Hello, Sheda. Hello from Jamaica. Dollar Swiss. Okay, Swiss. Yeah, why not? So we have a S&P as well, as I said yesterday. Okay, so something that happened yesterday, if I'm not mistaken, we have seen the Swiss Seco. So it's the okay. You can see these comments in my events in week ahead, guys. So that will be published after the live. But we have also published an article yesterday for Swiss yen and pound Swiss, if I'm not mistaken. So yesterday we had seen um, the Switzerland State Secretariat for Economic Affairs lowered down its growth forecast. So this is something that has added pressure to the Swiss, and we have seen Swiss in a decisive sell, especially against the yen. So it was the lower forecast numbers that came out from SECO, Switzerland, as I said, State Secretariat for Economic Affairs. So they have lowered down their growth forecast. And actually, they stated that the economic recovery is set to continue as expected, though growth is initially less dynamic than forecast previously. So this is what added pressure on the Swiss, and it keeps adding pressure on the Swiss, as we can see in this dollar Swiss asset over here. So sideways in the Asian and European session, but as soon as US session open, we've seen a bit of a resumption of the of this uptrend. Um, Even though, just to clarify that, the S&P is expected not to take any action next week. So in the previous meeting, we have seen that the S&P signaled that negative rates remains necessary. So what is clearly stated in the last meeting is that they will insist on the current policy, on their negative interest rates, in order to keep the currency under control. So on next week's meeting, they will actually meet on Tuesday, if I'm not mistaken. Sorry, no, they will meet on Thursday along with the Bank of England. We don't expect anything to change from their current stance. Okay, so yeah, dollar Swiss now. This is the 1 hour chart. We have seen the asset retesting right now for 2 hours in a row the high of the day, and actually broken it already. Bullish bias. Can you see that? Bullish bias has actually been sustained despite there's some slowdown that we have seen in the beginning of the day, but the MACD has been held well above zero line, suggesting that bulls are still actually keeping the asset at the high territory of the last 3 months, 2 months to be precise. We have seen stochastic bullishly cross, right? So bullishly cross. There is further steam to the upside in the next few sessions. So intraday RSI had a small, like a rounding bottom, like a bit of a correction, and is started retesting and ready to break the 70 barrier with a further area to be covered to the upside. So in general, intraday, the dollar Swiss remains into an upwards move. Okay, so already the high of the day has already broken. So we have a new high of the day. Retesting the upper Bollingers. Bollingers are pointing higher. Fast MAs are also pointing higher, even though they seem a bit weak. Let's see the 30 minutes chart, guys. So yeah, so at least in the very, very short time frame, near term time frame, such as 30 minutes and 1 hour, we can see that the asset is extending northwards. So next resistance could be found. So let me take the help of the Fibonacci expansion, applying on the latest. Okay, so okay, since the June's actually the June, July, August 3 for May, so 4 months resistance, 4 months peak has already been broken. Sorry, so you can see that. So that was the peak of the last 4 months, right? 92.72. But it has already broken. If you can see, the asset closed above it yesterday and extending above it so far today. So you can see even the daily volume just expanding higher. And MACD increasing slowly, RSI above 50 rising, MACD also rising. So there is an overall positive outlook for gold after it has managed to cross above this 4 months resistance and extending northwards. It's moved northwards so far today. So the next, if you are an intraday trader, okay, the next immediate resistance levels could be seen on Fibonacci expansion. So the very next one is the 92.95, okay, the 100% Fibonacci retracement, Fibonacci expansion, sorry, and the very next one, the 0.9317. Now, so these are the next resistance areas. Support is being held at the 92.56, the latest down fractal that we got. Okay, so now, okay, if And you see that. So let me put some Fibonacci. So the asset already recovered more than 60% of the loss seen in 2021. So from this sharp decline in March, April up to May. So I already reversed more than 60% of this of years losses. So if we have seen a solid, if we see next week a solid, um, actually continuation to the upside, a strengthening of the positive bias, then attention will turn into the 2021 peak. So I'm referring to 93. 94, sorry, 94, 0.94 level, or even 0.9470, which is the peak that we have seen back in March, in the end of March. So yeah, that was on daily and 1 hour time frame. Let's move on. Any pair very weak and very strong to get your opportunity. Um, okay, let me check. Okay, apparently the strongest currency today. I'm referring to today's performance ADE. So today's performance, based on today's performance, the strongest is Aussie, and the weakest is yen. So if we check dollar yen, um, sorry, Aussie yen. Let's see Aussie yen. I think it was had a yeah. So nice round bottom since yesterday. Not confirmed yet. We need to see the asset breaking this latest high at 80.50 territory and extending higher. So I will start with the daily chart actually. Let's see what's going on over here. So down, 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 steady. I should stabilize above the 79 territory and slightly to the upside so far today. That's why we said that yen is the weakest and Aussie is the strongest so far. So so let me check something. Apparently, in the traders board, you can open the traders board. Aussie has been quite strong against yen and against euro as well, while yen uh, sorry, Aussie has been strong against yen and against Swiss, while yen has been quite weak against Aussie and against euro as well. So if I check the euro dollar, we can see that euro yen, we can see this boost to the upside implies to a stronger euro against a weaker yen. So yeah, these are the biggest movers, the biggest gainer and the biggest loser of the day. Dear Ade. So Aussie yen right now extending gains after a temporary correction in the beginning of the day. Extending again higher, MACD increases. Stochastic already posted a bullish cross and pointing upwards. RSI also pointing upwards. It's already at 67 and is pointing upwards. So the whole picture for the time being intraday implies that there is positive support, positive bias for Aussie yen. So next resistance level for the asset would be, could be seen. Okay, this is not helpful, but it could be seen on 88.63. So it's the confluence of Bollinger's, the upper Bollinger band line, and a support that has now turned into resistance. So yeah, that was on Aussie yen. You have okay. You have missed a lot, but anyway, it's been recorded, so don't worry about it, Ozemoya. Let me see a bit the Facebook page, the Facebook comments. Okay, just 5 comments over there. Some okay, gold. We have replied to gold question. It was 40 minutes ago, so you managed to check to see the analysis of gold, dear Muhammad. Let's see. How about gold? How about gold? Dear Ricky, are you using any stop loss? Are you doing any risk management before taking an entry? Take care. Okay? Stop loss limits your risk, right? Gold, gold, gold. Okay, everyone is asking about gold, so we have already analyzed gold. Rahim, stay discipline has reached the turning point. Yeah. Okay, we need confirmation though, Sally. We need to wait to see how the today's candle, the weekly candle, will close, even though there is a lot of bearish bias on gold. So let's wait and see. Okay, so there are no questions really on in Facebook page as far I can see. Let me get back to. Okay, guys. What else? Let's see. Let's see. Even though no one asked about oil, but let's see oil before I close the session. This is a final call for questions. I'm here to reply to your questions, to cover any, to analyze any assets that you want me to see. So put some comments on, ask me anything you want. I will be here to reply. I'm here to reply to you and to help you. Okay, so let's see oil, just to give time to anyone that want to ask any question. So oil, significant support this week, actually since last week, extending August rally, even though we have seen that there is a bit of a profit taking over here yesterday with a doji candle, but the high territory of the past 2 months has been sustained. So the supply worries are still supporting the oil. Um, so the positive outlook for oil remains um, remains remains in place. Okay, but let me clear a bit this mess actually. Let me clear. Let me delete some lines. Okay, here we are. We have seen oil extending, reversing nearly all the losses that have been seen in this down leg in July up to the beginning of August. But there is a key barrier to be closely watched, and that is the peak that we have seen in July, since July. So 73.30, coinciding with the peak of the past 2 months, and also the daily Bollingers. But as I already mentioned, the outlook for oil it remains positive. So 73.30, 73 to be precise, 73.50 is the key resistance for the oil before a potential retest, actually potential move up to 76, or even, I will put the weekly chart on, up to 80 territory. There are a lot of analysts forecasting that oil could reach $80 per barrel. So we have seen a bit of a correction yesterday. Sorry, let's put that on. See a bit of a correction. If I check the daily chart, you can see doji candle and a a bit of a pressure on this very last day of the week. However, the fundamentals are keep supporting the oil. So oil is still hitting for a fourth weekly gain, as the supply words, as I said, support the oil, and in contrast with the strong rally in other, against the background of a strong rally in other energy commodities, and as the facilities in the US have slowly reopened after the two hurricanes. So there is still support on the oil. Something that could add some pressure on the oil is China. Okay, it's China, because they have stated in the past the that they might sell oil from its strategic reserves. So that is something that could be considered as a downside risk for in the long term for oil. For the time being, key resistance 73.50, but yeah, a solid bullish bias into as we're moving into the final quarter, ahead of the final quarter of the year. So above the 20-week moving average for 1, 2, 3, 4 weeks in a row. Bollinger's expanding higher, sustaining an uptrend since April 2020. You can see that we had the corrections, but we had some corrections, but the asset keeps extending higher, posting some in higher lows and higher highs if you are in a medium term, long term uh, 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 basis. Okay. And last but not least, someone is asking to, Ravindra is asking about, but it's close, right? Yeah, JPY is Nikkei, but let's, okay. So Nikkei JPN 225. There we are. Okay. Okay, so Ravindra is asking about Nikkei JPN 225, the Japanese index. So, so we have seen the. Sorry, guys. We have seen a strong rally for the whole of August and September in the Japanese indices in general, even though the asset has been seen a bit of actually an an upwards channel. Can you see this? Yeah, you can. Okay, it's not a great channel to be drawn, but you can see that after this boost in the beginning of September, we have seen a bit of a slowdown of the rally, but still pointing to an extension, to a strengthening of the overall positive outlook for Nikkei, with higher highs, higher low, um, um, uh, uh, like yeah, with higher highs and higher lows. So the asset so extending higher. MACD lines also remains positive, bullish cross from the signal and histogram. RSI has steady a bit, complying with this consolidation back to the upwards, this narrow upwards range that we have seen the past 2 weeks. So it's already still below the peak of the year. Okay, so the peak of the year is at the 30,735. So still shy of that peak. So however, guys, keep in mind that a break of that of year's high could open the doors to I need to zoom out to fresh record highs, I'm afraid, to fresh record highs. So on the breakout of this latest high, okay, next resistance area, let me put that right, and I put also Fibonacci level, but an inverse one. So the breakout of 2021's high, we could see the asset expanding and posting fresh record highs with next resistance area at the 61.8 Fibonacci expansion, 31,827. 33,500 is the meet between the 100 Fibonacci and the 161 Fibonacci level. So yeah, the Fibonacci expansion will help you find the immediate resistance levels if the asset managed to break the latest high that has been seen in January 2021. For now, the outlook remains positive. We could see that momentum indicators are positively configured, supporting this bullish, this rally seen the past month. On the flip side, key support level could be seen at the okay. Key support level could be seen on here on the 300 30,000 30,000, sorry, 30,000 is a very the immediate support level, so for near term trading, but more precisely the 20,700, which is set at the latest up fractal that we have back in April 2021 or May, I'm not sure, let me double check. So yeah, 10th of May 2021. These are the immediate, these are the support and the resistance areas in the medium term for Nikkei. So if there are no further questions, guys, I need to call it a date. Thank you very much for attending. Hope you're having a great weekend ahead. Take care. Tomorrow, next week is expected to be a massive week. If we consider that we're gonna see, we're gonna have the meetings and press conference out of 4 of the major central banks. So we're expected to be a very volatile week ahead. So take care, and including your trading some risk management before deciding to enter the market, especially if there are a very volatile days are expected. Thank you. Hope you're having a great day ahead, and I'll see you again next week. Bye bye.